Thank you. As you said, my name's Randy Martinson with Martinson Ag, and yeah, I'll cover a little bit on the marketing side of things for canola and some of the what I think could be interesting aspects that take place here so far in this for 2023. Of course, what we saw, vegetable oil has been one of the major drivers as far as the marketplace has been concerned over the last couple of years. We've kind of seen the soybean oil and some of the vegetable oils take a little bit of a back seat here now lately as soybean meal and meal has become a little bit more of a driving factor because of the concerns that we're seeing with Argentina production. But when you look at it, I mean, the vegetable oil side has still got a pretty important impact as far as the vegetable oil crops, soybeans, sunflowers, canola. And looking at it as far as canola is concerned, we're gonna kind of see that market be forced into deciding how much is going to go into, I think, the human consumption side, and how much is going to go into the production side for the renewable fuels. And of course, that is one of the bigger plays that are going to be taking place here going forward. And I know that Dave will talk about that here after me. But looking at it, when you look at it, right now canola is about 15% of for production, the world's supply of vegetable oil. As far as for exports, we're looking at about 7%. Palm continues to be the largest, but we are seeing an increase as far as canola is concerned. And as I mentioned, a lot of it is because of the biofuels drive. And I think that's going to be kind of the discussion that moves forward to decide how much of our vegetable oil markets are going to products are going to go into fuel and how much will stay in the food side. And that's going to be the debate going forward. There's a lot of money and a lot of research being thrown at the biofuel side because of trying to get close to carbon neutral. And that is one of the things that the vegetable oil market does as far as the renewable diesel. And you can see that market has been expanding quite dramatically over the last this last couple years, and especially the second half of this marketing year. And another thing to look at is that, we are also looking at the sustainable aviation fuel market. Around Thanksgiving, we did see a huge plant up in Alberta being announced, being proposed by the Energy Transition, where they're looking at, again, a very large plant being built, comparable to the soybean crush plants that we're seeing down here in North Dakota. So we are seeing a move towards the renewables fuel side in canola, as well as what we're seeing in for soybeans. What's been interesting is how we've seen acres increase over the last few years. In the U.S., we went from 1991 seeing a planted acres of less than 500,000 up to over 2 million right now, and I don't see that trend continue slowing down. I think we will continue to expand as far as the U.S. is concerned. Primarily, North Dakota is the biggest producer. You are seeing some being raised in other areas, in Montana and also in the Minnesota, but North Dakota is by far the largest. And when you look at it as far as our yield, that seems to be a little bit more variable. Back at 1991, we saw the yield start at 1,300. We saw a big drop in 21 because of the drought, but we've recovered nicely. And what that's done is, as far as our production side, our production took a big drop last year. It recovered this year. Our stocks continue to be extremely tight. Uh, when we went into after last year, we were basically seeing pipeline supplies in our stocks that drove prices up, and we did see a better production this last year, a little bit recovery in the yield, but we're still a little bit short as far as the market is concerned for the U.S. And when we look at what's our demand sources as far as the U.S. is concerned, crush is continuing to be the major part of where our demand is. We export very little of the canola that we raise in the U.S., most of it going towards the crush side, which is then goes into the human side or as well into the industrial side. What I think is going to be interesting going forward, Canada's acres also have seen a pretty good increase. I mean, we're fairly flat from the early 90s all the way up into the mid 2000s and then saw a pretty big jump. It's going to be interesting as far as Canada is concerned, just how much more they can expand their acres well, this is, I guess, the average price. As I said, we took a big jump in the price up to $32. But when you look at Canadian acres, as I mentioned, we were kind of flat all the way up until the mid 2000s, and then saw a pretty big increase, and then a leveling off of about 20 to 21 million acres. That's going to be interesting to see how much Canada will increase their production of canola. Right now, I think some of those acres will drift down into the U.S. as this year alone, Canada is looking at increasing their wheat acres. And so they're going to have kind of a debate or a bidding between the two, between wheat and canola, to where their planted acres are going to go. I think as far as the U.S. is concerned, might see a little pullback. Our biggest concern right now that I see in canola is that our insurance base price for crop insurance for canola came in at like $27.20 a hundredweight, whereas sunflowers are at about $30.50. So that might favor a little bit towards the sunflower side. But I do think that if we can start to see canola market come back alive or start to rally a little bit, it might capture some of those acres, especially because of some of the good yields that we've been seeing, especially in the north central and the northwestern part of the state. And when you look at it, as far as Canada's production is concerned, you know, this is metric ton. We can see that they're holding quite a bit of stocks. They did see a pretty good drawdown last year as well. In 21, they did see a little bit of a recovery as far as 22 is concerned, but we are kind of seeing maybe a plateau as far as their production is going to be, and then that's somewhere between that 18 to 20 million metric ton. As far as where their I believe this is their crush side of things. They crush quite a few, but also one of the big aspects that we see is where their exports come into play. They saw a drop in exports because of their production cut, but also because Canada or China stepped away from importing canola out of Canada for a few years. They're starting to come back and looking at importing a little bit more now, so that's helping to build their exports back up again. But I still think we're going to be looking at a race up here as far as the Northern Plains is concerned, where the profitability for the crop is likely going to go more towards seeing a little going towards the fuel side of things a little bit more than what we have in the past. And it's mainly because of our tight stocks to use ratio as far as world global or vegetable oil is concerned. Right now, we got down close to about an 8% as far as our stocks to use. And a lot of that is because of the shifting towards the renewable fuel side of things and because of a large drop in palm oil production. The profitability is there to for canola to be raised in the north central to the western parts of the state. We do expect to see acres kind of stabilize in those areas. But once you get to the northwestern and to the southwest part of North Dakota, I think some of that might start to compete against Durham, where their Durham prices have come out to be a little bit higher, especially on the crop insurance side. That'll even, I think, take a little bit of the acres away from spring wheat as well. So I think we could see a little bit more of a acres balance race as we get into April and May. Right now, the market doesn't seem to be wanting to buy for acres other than what we're seeing in soybeans, which is also another little bit of a hint on what we could be looking at as far as global vegetable oil. Argentina continues to see a huge decrease as far as their production is concerned. They're seeing another big cut coming in production estimates. So that's going to tighten up the supply of soybeans available to the world market as far as what's exportable, as Argentina is a large exporter of soybean meal and soybean oil. That might start helping to support the canola markets, especially here domestically and in Canada, as we start seeing a little more demand spill over away from the Argentina side. And when you look at the charts, I mean, that's one of the disappointing things that we look at as far as the canola market is that we've removed a lot of the premium that we built into last year's tight supplies and the big run up because of the palm oil market. And we're virtually sitting down. We haven't flirted with our new contract lows yet for old crop, but we have taken a lot of the premium out. And once we broke down below that 850, we started to see a pretty good retracement. At this point, I would look for canola to be able to stage a little bit of a recovery in the old crop. I don't think we're going back up into the upper 900s per metric ton as far as the canola is concerned, trading on the Canadian exchange. But I would expect that we should be able to get up and try to test that 840 to 880 area for old crop, and that should come into sometime here in the spring, especially if we continue to see some production cuts coming out of South America with their soybean production. And for new crop, we actually have seen a double bottom. This chart was actually done this morning, so it was actually after this morning's uh, early run as far as the markets were concerned. We haven't come in and hit the lows that we hit in September, but this is a market that is expecting, or at least now waiting to see where the acres are going to fall here for this spring, which we'll likely see here at the end of the month. And like I said, it's going to be interesting to see how many acres we can buy up here in the Northern Plains. Our spring is starting to become a little bit later as far as starting at this point. That might favor some of the acres to fade away from the canola and go towards sunflowers as well. So I do think that we are going to have a very interesting spring as far as the canola and sunflower markets are concerned going forward. I do think it's going to be kind of interesting to see just where those acres are going to kind of fall in the end. Now, as far as what I think is our potential is, I mean, we have a chance to get this market back up, like I said, up into that, maybe up in the 8.5 as far as new crop is concerned. But we start breaking above 800, and I think we'll start attracting acres again back over towards canola. The other part is what we're looking at as far as where the drought monitor is falling, and we are looking at still seeing some seasonally dry conditions. We've picked up a lot of snow. It's just a matter of how much moisture is in that snow. It's going to be interesting to see when we start finally do get into a melt, and how much snow we get over the next couple of weeks, and how late we get. But we are looking at a moderate drought situation in a lot of the areas where a majority of the canola is raised. And especially as far as the deep soil, where actually the western part of the state is seeing a little bit more drier conditions, where that might see some sunflower switch over and replace canola in the southwestern part of the state, or even where we see some durum acres go into play. But I am optimistic that we could see a pretty decent production and pretty decent prices yet for this 23 growing season. A lot's going to be determined though, just where this spring falls, and where when we finally do be able to get out or back into the field. So that's kind of what I've got as far. That's kind of a quick look at what I think as far as canola is concerned.